The problem with Bitcoin just now is it only has a value relative to other things, and those other things are falling in price. We're live, Chris.
Welcome to episode 45 of the Acid Capitalist Show. I am Chris Sweeney, aka The Alchemist. And if you're watching live, which I hope you are, obviously this will be going out as an audio as well, but I think you can see I am basking in a little bit of sunshine. But we'll check in with the man himself who's used to being in the sunshine, but is now indoors, wearing shirt and wearing a pair of trousers, I think. It is Mr. Hugh Hendry, the Acid Capitalist. How are you, Hugh?
Well, Chris, I think I'm actually adopting a bit of a Duran Rio kind of flesh-coloured shirt. But
so, Hugh, how are you? How's your week been? Give us a wee catch-up. I saw that Twitter removed you from a platform briefly.
Yeah, how strange is that? What would the Alchemist do?
Oh well, it would be straight round. Well, I mean, it depends. It depends how much you know about them. But if they're in travelling distance, it'd be straight round to their front door, knock on the front door, and have a word. Have a word, shall we say? I see people joining us. We've got Alistair, who's commented that we've got nice sunglasses. Thank you very much, Alistair. Talking about people joining us, please come into the chat room. Please join. Please send questions. Hugh will take them as the show goes on. But we've got to mention, we are rocking and rolling on Apple. So last week we made a plea. Would you call it sort of almost a prayer, and asked for the tribe, the army, to review on Apple Podcasts, because whatever happens with the internet and the algorithms and all this kind of stuff, if you leave a review, that it helps us build up and basically things get better. Isn't that right, Hugh? Basically, we need a bit more traction on that. That helps us build the audience, build the show. And we've had a couple of good reviews. Macro Rock and Roll is one of them. Oh, sorry, that was the title. Macro Rock and Roll. So that was very nice. Highly enjoyable. Hugh is a legend, they say. Which is, that's nice words with that, Hugh. No, that was from Ed Robbins. And also Sons of Ulster. Fascinating insight and good fun. So, Hugh, people have responded. They're giving us a bit of love on Apple.
This week was just overwhelmingly kind. Okay. The Alchemist, however, has got a target.
I do have a target, and we've got to grow that target. We need a lot more than 29 this week. So why don't we?
What?
Should we try and break 100 this week, Hugh? Would that be our target? Have we discussed that? I've got the feeling I've missed a meeting where a target has been discussed. Someone has given me a memo that I have lost.
Increasingly, I'm thinking you're the guy that carries the gear. But that being said, because this was literally a conversation that we had no more than 8 minutes ago, because I am conscious of the shifting sands which consist of your mind. And I had asked you if you could conceive of asking the tribe to establish a target. Folks, let's push it to 1,000. That's impossibly large.
There's a lot of stuff going on in my life. But but we want to make that target. Thomas Wolfe has just come in. He said that he's left an enthusiastic review already, so thank you, Thomas. But I'll also mention a few people that have loved us. AFDLP, J00723, Connecticut Ben, Reindeer Wrestler, Scruffy 99, Wendy Bakes 7, Rave Babe 123. Hugh, come on, is that you in secret? Are you Rave Babe 123?
I think it's Dylan Grice. It's Dylan Grice.
Jack Dorsey without the ace. I don't think it's the real Jack Dorsey. PMMCMU, Craigens, TC the Top Cat, 2 Goal, Ross 1337, TK Chung, and Convex Macro. All of you have left us reviews and got involved, so thank you very much to all of you. And the more the merrier, please, people. People just keep getting involved. Like you say, we're hacking the system, we're inside the system, and we're trying to change the system from the inside out as opposed to the outside in. Do you like that, Hugh?
We're also now well beyond the boredom threshold of our very kind tribe. So let's get this show started.
Let's get into it. Well, Hugh, let me ask you, I'll take one from the top. Let me ask you briefly about Japan. I've been reading an article saying that there's a hedge fund out in America that's got a large, sizable position in the Japanese currency, and they're going to pull off a Soros-style trade, as we've talked about many times, the 1992 trade when Soros broke the Bank of England, so to speak, and there's a hedge fund lining up to do that in Japan. I'm reading a lot about Japan. You've been tweeting about it. So what is the up-to-date situation on Japan as we speak, and is this hedge fund going to pull off a Soros-style move?
Chris, get out of here. Come here. There's a hedge fund? There's a mythical one hedge fund, which is short.
Mythical. I can give you the name.
No, please don't.
Asset Management.
I do not want to know the damn name, right? Every damn macro fund in the world is short the damn yen, right? It's a blinking crowded trades, all evidently and obviously in front of your nose, right? And so any pompous ass is like, oh yeah, like we're Soros and we're going to do that trade. Bunkum, everyone's doing it, and therein lies one of the problems. So I am someone who tries to caution and discipline my cavalier and exotic mind with the discipline of price trends. And something has changed within the domain of our Japanese friends. And that something is their currency. Their currency, I think, it has fallen, I want to say 16% versus the US dollar this year. And that's a lot. That statistically, we can say that something has happened to the gene pool, right? And it's for us to determine what happens next. Now, what has happened is that unlike any other Western economy, Japan is snoop to cook. What is that term? You snoop a cook or you cook a snoop? Cook a snoop.
No, you cook a
snoop.
snoop.
You cook it, yeah. You're like, nah, yeah. We are not raising the interest rates. I cannot do a Japanese.
Okay, Hugh. Hugh, we've got the questions are flying in here. Should we take one from the listeners? Do you fancy one?
I should end on the Japanese.
Oh,
thing.
sorry. My apologies.
The 16% weakness of the currency is that the Japanese are proving obstinate in showing a determination not to raise interest rates. Okay, so they are pegging the 10-year at a yield level no greater than 25 basis points, and hedge funds, as you mentioned one of like 1,000 are pitched against them, and they are shorting, and they would make money if that yield were to break the self-imposed ceiling of the Bank of Japan and trade higher. For comparison, we're seeing a rally in US 10-year treasuries, but from around a level of 300 basis points, and we're talking about 25 being the line that Japan is seeking to protect. Now, this has been a notorious trade for the best, for 3 decades. It kind of neglects two things: that the Bank of Japan can do anything. I mean, it can just keep, it can just keep going. It will not run out of ammunition. And secondly, for some structural reasons and for some reason, let's call it happenstance, but Japanese inflation data is significantly more muted and less aggressive than the virulent inflation, which is capturing other economies closer to what we regard as home. And then finally, the Bank of Japan came into this saying, hey, actually, we have a stated political objective to generate inflation greater than, it was 2, and I think they raised it to 1, because for 25 years they were just a laughingstock because they couldn't even get 1% inflation. And they kind of came round to reasoning that such is the size of capital markets, that it's actually capital markets, we'll explore this later, that actually tighten credit, and who are really responsible for inflation taking off or not. And so what has happened periodically over the last 30 years is there have been moments, scintillating moments, where you thought it was possible that Japan could suffer, that Japan could suffer, or Japan could achieve its objective of generating inflation, only to see the private markets, before the yield curve control measures were put in, raise interest rates and therefore tighten credit, and then push their objective away from them. So I have some sympathy for what's going on within the depths of the Bank of Japan. Chris?
I'm here.
Right.
Sorry, I don't know what happened there. I don't know if my computer overheated in the sunshine, but I've moved a bit closer, so hopefully that will cause no problems.
Okay. Ask me a question in case you disappear so I can answer it.
Oh. Okay, Dave Doe. Question: why are the equities and bond markets saying that US dollars are preferable to hold, but the local shop seems to think US dollars are worthless?
Oh, great question. I mean, that's the nature of the psychology of markets, that the greatest opportunities present themselves paradoxically. If anyone recalls my career, some people call themselves value investors, others are growth, others are just smart. I was either paradoxical, or I refer to myself as a time investor. He's gone again. But to answer, Neil, your question, the greatest opportunities arise when those who know it best, those who are closest, those who've got their nose like right up at the grind, they hate it, that they've given up, right? And it's capitulation, which is the touchstone, which is the mother of promising upside. You're taking risk being on the other side, and it helps when your counterparty who's selling to you, they've given up, they're emotional. That puts you at an advantage. I got involved in agricultural equities back in 2005 for that premise, that farmers who knew agriculture better than anyone had given up. They were essentially becoming real estate agents, and they were cutting down their plots and selling it to wealthy hedge funds and today wealthy tech billionaires. Right, Chris?
I'm still here, Hugh. Can you hear me okay?
I can. Hit me with another question, because I think you're going to go again.
No. You know what I think it is? I think it's actually that because I'm Scottish and I'm in the sunshine, my brain can't handle this, and my computer's Scottish, so I think it knows that the heat just can't handle it. So we're having a bit of technical difficulties, but I am still here, people. Okay, Bill Powers asked you, do you see the crypto bros coming home to speculate in precious metal stocks? Only things left that have not gone up. Seem set for a huge run. What do you think? Do you agree with Bill?
Well, if we go back about 10 days ago, the god of macro, Stan Druckenmiller.
Is that not Hugh? Hugh, is that not you? Are you not the god of macro?
I am I tell you what I am. I am the lap dancer. I'm your private dancer of macro. That's what I am. I am your dark secret. You're on Twitter and you're looking at my threads, and you're in the cafe and
you're the mistress.
Looking at this, you're looking like that. You're like, no, I really am. I'm doing research. I'm listening to. I'm reading research. So Stan made this point that he didn't make a point. He made he speculated that is it. So we seem to have had two moments with regard to inflation. We had a moment. Let's set the date to 0, okay? And the date being March 2020, and COVID, the invasion of the alien body snatchers, and we've never been confronted with this. Fear is palpable, and fear is legitimate. And the Fed, I have no arguments with what the Fed did in the month of March 2020. I have no arguments with it. They were a powerful central bank, and they took the role of lender of last resort, and they said, we got you, and we're going to inject liquidity. I know that's going to piss people off. There you go. Thereafter, I've got issues. And let's say something which is meaningless. This is a meaningless statement, but this is pop culture. The Fed printed more dollars in that month of March 2020 than the entirety of all dollars ever since the beginning of America ever printed. And so people went, oh, that's inflation. But it was inflation that set a light to asset prices. Okay, so we had an inflationary bull market, Chris, yeah? And in an inflationary bull market, crypto went from 10,000 to 70,000, 7-bagger in something like 9 months. Woo, pretty cool, okay? We're on the other side of that, where the Fed's going, F-U-C-K, okay? And so the inflation is very apparent, but now the consequences of, I hate that word inflation, but the elevation in price levels is very apparent. And now there's no celebration. Indeed, it's the opposite. It's recrimination. So we're in an inflation bear market, and the speculation that Stan, his conjecture was, is it that we see a role reversal where gold supplants Bitcoin and becomes, if you will, the speculative asset class of choice in a bear market inflation period? Okay, that's his speculation. I'm sympathetic to that, but at the present moment, in this moment where I have never been more bearish in my life, I don't want to own anything. Okay, next question.
Even St. Bart's property.
I have no choice. I am wedded to that. But St. Bart's property. Let's review that. I'm a Muppet. There, I said it. Do I feel better? I don't know. But anyone, maybe 3 or 5 people listening to this have been to St. Bart's in the last year. It's pumped up. It's really, really busy. It's really, really expensive. But when you're in your mock, and you've got your hat and your shades, hey, this is cool. Okay, guess what? You're stuck behind a concrete carrying truck. With a Portuguese guy with bellowing smoke. You're like, hey, welcome to St. Bart's. Which is to say, every Muppet has been like pushing capital into you think, St. Bart's is kind of unique because the degree of leverage, he says, trying to convince himself, the degree of leverage which is applied in St. Bart's is, I'm sure, is way less than elsewhere, right? But in terms of trophy asset property locations, Nick's bid is, Nick's bid is like a buy now, pay later funding round. If it was 40 billion last time, it's kind of like 15 billion this time, So.
Yeah. Well, if anyone on the chat and listening has been to St. Bart's, please leave a comment. Maybe you can recommend somewhere for Hugh to go have dinner, or maybe you can talk about St. Bart's or tell us something. Anyway, Richard Herd says, Chris, are you in Canada? If so, welcome. Peace, my friend, I am in Canada. Location undisclosed, but I am within your borders. I am, my friend. So, D123 Aid123 asked, and he wants to talk about your old friend Hugh, Bill Ackman, the man that you love and adore. He quotes Bill and he says, inflation is out of control and inflationary expectations have become unanchored. We know you love talking about Bill, Hugh, so he wants your thoughts on that. He wants a rant, really. He wants a Hugh Hendry rant out the top drawer.
Come on, this is an educational show, but I do love the opportunity to talk about the pine needles, the smell of damp.
But did you not say that you said to me that people would want Bill Ackman to marry their daughter now? Would you want Bill to marry your daughter then? I don't want anything to do with. No, but you just said that he's the kind of guy you'd want your daughter to marry.
I speak with analogies and conjecture, but my point to you, Chris, is I'm not anybody, but I get it. I'm voyeuristic. I'm upstairs looking down, right? I'm here in London. I walk. I'm like a ghost. You don't see me, right? I see you. You don't see me, right? And my daughter's in marrying Bill, right? But the guy, he smells like damp pine needles in the morning, and that's wonderful. But when it comes to macro, Bill, I smell the pine needles. Okay, move on.
Right, okay. We've got one here from Joe Phil. And it's a bit existential, so maybe it's a quick one. Do you consider yourself a priest or a warrior?
Oh, I'm a prophet. But this is a great opportunity to quote the Wu-Tang. I can't do it.
The Wu-Tang Clan.
I can't do it, John. There you go. The Wu-Tang. I was trying to do TikTok this morning in the car to Ladbroke Grove, and I was trying to do the Wu-Tang. We were listening to Triumph, which is a triumphant song, and it's like, in a foreign country, remember, jump the gun, not the frying pan. And I wrote that, I translated that into French, and there was a year where that was my electronic signature. Sauter le piston et pas la poule. And it spread. Anyway, let's move on. Chris, actually, we listen, people, we are willing to throw open the church doors. We want you on this
the parishioners,
show. Like,
the parishioners to join us. Yes, the clergy. We are the clergy. Please join us.
We are not like the Suits. The Suits say,
no.
Heads I win, tails I win. You, who the hell are you? All right, you lose, okay? We want you on your show. So, Chris, I can see that in the background that you are ready to welcome one of the clergy.
One of the clergy has got in touch. Yes.
Yeah, and before he comes on, let me just say, hats. Give me the name. Forgive me. Give me the name.
Well, I've got his Twitter name. Should we mention his Twitter name?
Make it up, John.
No, okay, I know his Twitter name. No, it's Edge Game. Edge Game's his Twitter name.
Okay.
Edge Game's his Twitter
but
name.
I wish we had this. Christian.
Well, tell his name when he comes on. He'll tell us.
Indeed. But yes. I'm going to call him John. John Doe.
Okay.
This takes a lot of guts. Okay,
yeah.
People. This takes a lot of guts. Okay, Chris, over to you.
Can you allow him in? Here he is.
Hey. Hi,
Hello
Hugh.
there, Nick.
Hey, Chris.
Not bad. But we had you as Edge Game, but now we see there on in nice pink. We see Nick. So Nick, tell us about where are you in the world, my friend, and tell us a bit about yourself.
Just outside of London. A bit about what do you want to know? You know, I'm not a financier of any kind. Just interested in opening my eyes to the world, how it works. I'm curious about that sort of thing. So thanks for having me.
Nick, can I ask? So welcome to the show. Thank you. But tell us how you discovered the show.
Oh, well, I've heard of you, Hugh, before. Probably from 08 times on BBC, something like that, and that's when I got interested in economics and the way money works. Just expecting things to crash, and then it was all bid up by QE and lower rates, and yeah, I was surprised. I think maybe I don't know much about. I think maybe I saw a video previously where you said, you were surprised as well. Maybe you thought they weren't going to do that. Am I correct? Or I don't know.
Go, Nick. Go. Come on. Let's move this show on. Come on.
Okay. It says like the market's busted at the bottom, so maybe I can work this one out myself now. But what is your take on Bitcoin, on other cryptos that aren't complete scams, and on programmable money, CBDCs? I haven't seen you talk in huge depth about this stuff. You touch on it. Just interested in your thoughts. Longer term, not just during recession.
Yeah. Okay.
I'm interested in your view on that.
Okay. And Chris, why don't you also supplement that rather with, because you had some prepared stuff, and I think you had Scaramucci or whatever. You had a comment there, no?
Yes, I did have a comment from Scaramucci. Well, I don't know if everyone who Scaramucci is. Scaramucci used to be Donald Trump's press spokesman for about a day, I think it was, or 2 days, and he's now back doing hedge funds. So he wrote he basically said that he believes that Bitcoin could balloon to $100,000 over the next 12 to 14 months. He says, I can't predict the future, but what I can see is a tremendous amount of robust development and adoption.
So, I really object. No, so that Scaramucci comment, hey, 100,000, talk is cheap. Is there any validation? I mean, hey, why not say 1 million? Why not say 200,000? Why align yourself to 100,000? So, it's clickbait. That's all it is. It's a figure greater than the present. So crypto and crooked crypto. Let me take that on first. And within the guise of Bitcoin, to my mind, the debate is the price of Bitcoin, and everything else is kind of noise, or it's Bitcoin with an additional service. And so it all comes back to Bitcoin, and Bitcoin is, let's call it 20,000 today. Now, Bitcoin has been conceived as a digital, to be a digital version of gold, to be a digital version, to have attributes that you could find in the US Treasury market, and to have attributes that you could find in the commercial property market. And all of these attributes, when you add them together, you're trying to create the perfect asset class for people who are just rich, right? So for me, there's rich and there's rich and there's rich, whatever. But I kind of made enough to be me, okay? And so when I come to invest, my number one rule is I don't want to go back to living in a project, into living in social housing and having no money, right? My life is amazing, okay? So my priorities are different. My priorities is I don't want to take that much risk, but I'm very obvious that we live in a social democracy, and when bad things happen, the worker bees say, hey, sort it out, build bridges, give social security, pay unemployment benefits. They don't say go to war, but that gets thrown in, and over 100 years that leads to an enormous a reduction in the value of your wealth. And so Bitcoin's like, we got this, and it's invisible. I can't even. I'm picking up an imaginary digital thing, right? And it's like, oh, I can put that in my shirt. I can put it in my pocket. I can take it anywhere. Unlike a piece of gold, unlike a commercial property. Okay, so that's all fantastic. When you come to these presumptions of value, it doesn't have any value, right? It exists with a perception of where it can trade, and so the price or price targets that you would associate with it would be if it were to displace a component of the gold market or the treasury market or the property market. And these are enormous. Gold's not an enormous market. Gold is, call it 10, 11 trillion US dollars. The treasury market is enormous. That's $50 trillion. The commercial property market, I guess, is another $50 trillion. And that's how you can conceive of these things. But we're presently in an environment where all assets their prices have become unhinged from reality. And the value of all assets in the United States of America presently is about 7 times GDP. Okay? Perception is greater than the reality of their worth presently. And what we're seeing is that there's kind of mean reversion, and valuations are trying to find truth. We're trying to find out, God, I just woke up. I've got such a nasty hangover. What's this thing worth, right? And it's worth less than it was in the summer of 2021. And the question is, how much less? So one of the problems with Bitcoin just now is it only has a value relative to other things, and those other things are falling in price. And so it'd be a lot better to wait until all falls. It's a bit back to Stan's point that Bitcoin was great when. It's the reason why Bitcoin's value exploded, because its peer group were all exploding. US 10-year treasuries went to a yield of 0.5, and the inverse is a price which went exponential, right? Treasuries went to an exponentially high level, okay? And that would, an Apple, which is deemed to be a risk-free, again, a kind of proxy for what Bitcoin wishes to be when it grows up, goes exponential. So no surprise that Bitcoin goes exponential. But turn the page, and we're now on a page where we're trying to, truth and discovery are leading to lower prices. And so I would not use the metaphor of crooked in the association with crypto or Bitcoin. It's here to stay. Blockchain et al. Even speculation in Bitcoin is no bad thing. The promoters like Saylor and stuff, go to hell. The principal problem with it just now has been that for all of the nobility, all of the wide-eyed doughness of, hey, we're in this because of good things, they got suckered by, they were hookers for a yield. Can I say that? Hookers for, I'm making that up. Hookers for they've been slammed because they took the integrity of their Bitcoin and it wasn't enough. There's no yield on gold. There's no yield on Bitcoin. And they messed it up by creating a speculative endeavor called lending into an economy which is now slipping into a recession, and it blew the whole thing up. I'm a plastic thief with no belief in what I say. Okay, I'm finished. Thank you very much, Nick.
Thank you.
Good luck to you. Okay, we'll let you go. Bye.
Cheers, Nick.
Chris.
Lovely to meet you. I've also got to say, our old friend Bryden Tice from last week, a few weeks ago, he was our first live ever caller, and he just came on and said, "Awesome job, Nick, great question." So the church is, there's a new connection there. So this community is growing. People keep on plowing ahead. Right, Hugh? Let's jump right into it with Guillermo R. Hugh, in a global liquidity dry down, do you think that when Bank of Japan release break 0.25 interest will force USA to pivot, even if at that same time there is still high inflation? Or will US flip-flop before?
Or none of the above.
Could be.
So the only valuable thing you can take out of this question is the here and now. What happens in the here and now? What happens next? And I'm going to say something bodaciously silly. I think you see a recovery in the yen. We're already seeing tentative scratch marks in the US 10-year long end of the bond market. You're seeing scratch marks as it says, we've fallen enough. And then on top of that, and the week that's just come to it, the week that was Chris Sweeney, the alchemist, the week that is a week where in the commodity market, in markets like copper and elsewhere, in agricultural markets, in markets where there is a shortage, where there is acute economic sense for prices to continue higher, those prices have fallen. And so here we are a week after the Fed and its surprise 75 basis point rate hike, and commodity markets are now reaching a judgment that such is the recession that macro is all about seeing in a year's time. And as they look ahead, they see something even nasty for the copper market, even nasty for the oil market. And so if that's the case, I would not choose to be short JGBs at this point. And the reciprocal of that would be being short the yen. And indeed, back to your point, the fact that you wanted to open the show with and this is not you, but with the gloating of one macro fund in the US going, hey, call me Soros, I'm going against the Widowmaker. All of that together makes me think that we see a pullback. Now, thereafter, who knows, but thereafter, I don't believe it has anything to do with America. The greatest collateral damage that could arise from Japan being wrong, Japan having itself called and having to change policy, the greatest casualty could be China and what it does to the Chinese currency. And then as dominoes begin to fall, that would come back into the purvey of the US and the rest of the world. Then we'd be talking about Mad Max. But again, let's move on.
Well, the questions are coming in. People, please keep on going. I am on the questions. Dimitri Van Camp, Hugh, what do you think about the unusual platinum to gold ratio being at the lowest level since 1880?
We're looking at a shocking economic prognosis. Why is it shocking? Forgive me. We just have never seen asset prices being 7 times the size of the economy. So 2008 was an event, right, which nuked the financial sector. It made every bank in the world bankrupt. Okay, what happened? What happened was there was about over maybe the course of 3 years, either a 25 or a 35% correction in the value of residential property. Okay, residential property values at that point would have been about 30% of GDP. So we're talking about there was a 10% of GDP vaporization of phantom wealth. Okay, and then on top of that, the stock market fell. The S&P fell 54%. Okay, so there was another, let's call it 80% of GDP. We lost 1 times GDP. We vaporized 1 times GDP, and that was enough to destroy the world's banking system. Okay, so to answer the question, what happens if we go from 7? Remember, Seven was a movie with Brad Pitt. No, and was 7 the movie where the kid could see dead people? I can see dead people. Why? Because what if we go from 7?
No, it's not that movie. That's The Sixth Sense, I think. No.
Sixth Sense. You're right. Okay. Well, let's roll the two together. With 6. The
Seventh Sense, the sequel.
Yeah, the Seventh Sense. I can see dead people. Why? Because if we go from 7x asset value to GDP to, like, God forbid, 5, maybe 4, the magnitude of wealth destruction is multiples of what we saw in 2008. This is why I'm shaking in fear. This is why when I don't know if we got any questions on there. Like, again, I'm going to bitch about uranium. Okay, why you folks, like, you're smart. That's why you're tuning into this show, right? Smart and a little bit deviant, but that's the deviance is why you're smart. Okay, and so you get uranium.
Well, there is a question.
There's a shortage.
Can I jump in for a second? We'll have Javier or Xavier, who's a long-time contributor. So thanks again, pal, for being part of this. But he mentioned something slightly related to this. After yesterday's drop, is now a good time to scale into Rio Tinto. Is this something Hugh is doing himself? It looks like the dividend is now 17%. That smile says Hugh is doing this. Does that smile not say? Are you big on Rio Tinto, Hugh? Are you up to your balls in Rio Tinto? No.
I can only think of Duran again. Her name was Rio, and
she dances in the sun, or something like that. I think it was, yeah.
Okay, so I would refer Javier to my latest Instagram posting. So this is thank you, because that it rhymes perfectly with what I was attempting to say. So first of all, there is no such thing as a secure, bankable 17% dividend yield. Let me say categorically, what's going to happen will lead either to the complete suspension of the Rio Tinto dividend or to a substantial haircut to said dividend. There is no such thing. We have passed the point of no return. That dividend is a phantom. Okay? I cannot give you investment advice. Okay? So let me talk as an acid capital. I'm high on my supply. Never, why would you take my thing, right? This is show business. This is not. I'm not a blinking stockbroker, right? Rio's is going to a price of 35,000. It's a big, that's the sterling price, not the dollar ADR. The problem with Rio, let's put shout-outs Cameco, let's put shout-outs to, this is not a rogues gallery. I am shouting out stocks which are scintillating, which are on the edge of explosive bull markets, right? CF Industries, maybe potash. What is the US potash? Crikey, what's that name? People are yelling at me anyway. You know the one. CF Industries, Rios, Cameco, right? They are. There's no such thing as a good short. If there were such an oxymoronic term, you would find it by shorting these stocks, because the future course of profitability is so evidently higher. It's got a trajectory. They're going to make a lot of money. Okay, and so you're going to take so much. You are invested with a belief, and the idea that you're going to reject that belief, like, you've seen God, you've seen Jesus. He's a real thing, and he's going to make you rich. He's going to take you to heaven. You're never going to sell that, except you're going to sell it at the bottom. You're going to be the last person to capitulate. But when you sit there and you tell me, you look me in the eye and you say, as a capitalist, I'm never selling it. It's Jesus. Right? I remind you, I say, when the centurions come, they say, hey, you seen the guy with the hair, the guy with the Jesus boots? What are you going to say to me, Chris? What are you going to say to me?
Never seen him.
There you go. Next question.
Never seen him. Well, Mosaic was one. People helping you out there. Mosaic was the one you're looking for, and also Zim Shipping as well. Someone chipped in with Zim Shipping. So the tribe is helping out the acid capitalists. Now, Hugh, right?
Hold on. The Zim Shipping requires... we're not accepting that one. Stuart's inquiry, I will return to that one. That's a bit roguish, okay? I am listening. Anyway, next.
Hugh, we've got a question about Roman Abramovich and Barts, or an economic question. What would you prefer?
Economic question, please.
Big surprise. Okay. Would you love your thoughts on EWZ brackets Brazil capped with the backdrop of demand destruction and commodity importing EU and others? Your thoughts on Brazilian companies' dollar debt? This person has been asking this question many, many times. So I thought I'll get your thoughts on it, because they really have been pumping out. Even a couple of shows ago they asked me, I forgot to answer it. I forgot to ask you.
Heavens, that's diving very, very deep. And so my answers can only be general answers, which might reveal ignorance. But I expressed some enthusiasm for the Brazilian currency about several months ago. We always think of the Brazilian currency as being a basket case. We lump it in together with its sovereign cousins south of the border. But it's a bit like how we dismiss investment returns from the 1970s. Cash. What do they say with inflation? Cash is trash. Well, that's just a trash statement, because the best performing instrument in the 70s, give or take, okay, gold probably beat it, but the second best was cash. You got really rewarded. You got a high carry for holding cash. And that's the same with Brazil. You get a very high carry on Brazil. And it's kind of used to, there's an argument that where we are just now, we're on the gates of hell, and beyond the gates, it's like, oh my God, there's the beach of Rio. There's the whatever. There's Brazil. Brazil's been there. Copacabana. Thank you. Brazil has found a way of living with such volatility. But against that, there is a shortage of dollars, as crazy as that sounds, which is to say that every sovereign and every corporation based outside the United States has typically issued debt, which it has to repay in US dollars. It's typically collateralized against local assets. And what's been happening is the local assets have been falling in value, and the dollar liabilities have been ascending and creating an acute shortage, which becomes like not a virtuous, but what's the opposite of a virtuous circle? A vicious circle of doom. That's where we are just now. And so as rewarding as Brazil might well go on to become, and indeed as a passive investor with the yield that it offers, I would not dismiss it. But in terms of being opportunistic and seeking a return out of Brazil today, I would not be there.
Is this accurate? Capitulation is marked by all correlations going to 1 as leverage is washed out of market. True or false?
Oh, true. I mean, what happens is that large, inverted commas, professional investors have these risk models, and the risk is largely determined using volatility and diversification factors. And when volatility rises and correlation, the diversification factor, when they converge, there is no diversification in your portfolio. So again, back to my point about asset values being 7x GDP. The problem so far this year has been that there has been no diversification, that normally given the waterfall slide in NASDAQ, like when you, in your risk models, you would have anticipated that treasuries would have caught a bid, and that's not happened. And so this is precarious again, because the understanding of risk is being challenged by correlations going to 1. When people are confused about risk, there is an insistence that they take less risk, and that causes them to reduce, i.e. to sell, and sell feeds on sell, and that takes you into the market where we are.
Well, Hugh, I was going to say, can I ask you about one of your tweets? Because Hugh's been putting a lot of good stuff out on Twitter, so I'd like to put one to you, Hugh, and maybe you can explain it to me, because you said, June 23rd, today the mind games have evolved. The Feds have raised rates numerous times, clearly oblivious of the ongoing depression. The first rate hike no longer cuts it. No, it's the surprise hike, the greater than expected hike that now cuts it. So tell me about the surprise hike, because I didn't get that. What do you mean by the surprise hike?
Well, they spend all of their time not surprising. And of course he stood up and went, yeah, 75. Boom. And at that point, and again, back to King Stan, not Kingston in Jamaica, but King Stan Druckenmiller. He's like, if you're going to confront, where's the camera? If you're going to confront a guy with a gun, okay, first of all, never confront a guy with a gun, okay? Run away and kind of like zigzag, right? Because there are very few really good straight shooters. Zigzag and run, okay? But if you're going to confront a guy with a gun, only do it because they are rational. Don't do it to a cokehead. Don't do it to someone like believing in God or whatever. You're gone, okay? They're irrational, okay? And when the Fed went for 75, it was like, we're nuts. We are nuts, right? You tell me there's a recession. You guys are smarter than us. We're not listening. We're not listening, right? We're going to do this. Screw you, okay? And that was really the point of capitulation, where you go, so Stan was saying, hey, listen, we've had a watershed moment for treasuries. I have participated, right? Stan has, not me. Stan had shorted treasuries. He's made a bundle. And he's like, so normally what I'd be doing now is I'd be going long, because the economy sucks. Well, it's going to suck, right? And that is a good environment for treasuries. But I can't. I cannot confront an emotional, irrational person with a gun, okay? That's not my business. I'm longevity. I do this again and again, and that's like, so I walk away. I've got no position. That's where we were. And so 1 week later, and having surveyed the wreck in commodity prices, which have followed the irrational, give it to them, smack the market, purge the system of its rottenness, me and other people going, maybe they did ring a bell. Maybe this was where you go contrarian. But I have to emphasize, maybe, because they've still got a gun. They might let it off again. And that's a dangerous business. That's a risky business.
Well, thanks, Hugh. Well, that came from Hugh's tweet, but he's putting out a lot of good stuff, people. So get on Twitter, read his threads, go through them. A lot of great stuff there. Hugh, a question that people have asked in different ways. Someone talked about social volatility, but I'll use this question because I think it kind of ties it up. Has the rise of populism changed your views on markets? If you've never considered it before now, would still love to hear your thoughts? And someone also talked about, would it inhibit your inability for your analysis? All this stuff going on, does it kind of get in the way of what you would normally do with all the social volatility and the kind of populism stuff?
So it's a great question. It does get in the way. It does crop up. It got in the way for me in the aftermath of 2008. I think, Chris, I was angry. I took to my pulpit. I went on. I offered myself up to the media, the traditional media in the United Kingdom. I was attacked for it, whatever. But I gave a good hand, and I was annoyed. I was angered that we let a lot of malpractice. We swept it under the carpet today, and that was so wrong. That was wrong in the sense that my day job, the job that was paying my bills, was to be a moneymaker, and that got in the way of being a moneymaker. Okay, I should have been buying equities when the Federal Reserve, Johnny should be, but March. Listen, people, when the S&P is down 50%. I hope you've sold everything before that, and I hope you then start inching back into the S&P being down 50%. You don't put everything in, but you put something in. I failed to do that. To the present, I've now come to understand, anyone reading my tweets would think, I don't know what you would think, but they have a populist overtone, because I've come to recognize, and thanks to Michael Pettis, the professor at Peking University, that the international trade, the rise and prominence of the Chinese economy. China's economy is $15 trillion. And other economies from Singapore to Korea to Japan to Germany, they pursue a model which is effectively the instigator of class war. For everyone that blames Thatcher or Reagan, maybe because they allowed for the internationalization of trade. I think they should have. I didn't think they had a choice. We've taken 1 billion global citizens from living standards you'd associate with the 17th century. Clearly, that is unacceptable in the 21st century, and we have to think of that as an achievement. But it was effectively a class war, because you were hollowing out the livelihoods of communities, and you were transferring those jobs to China and elsewhere. Okay, this is why inflation has been in decline for decades. Nothing to do with central banks. My problem today is we have higher prices. Not because of the poor folk. We got higher prices because of the crazy rich folk that push asset prices so high. We've got high prices owing to the crazy folk who do ESG, environmental social governance, and don't allow for the discovery of scarce resources. And what do? But we raise interest rates, okay? And we punish the poor folk. So it's class warfare. And now you've got the Federal Reserve amplifying the class warfare, and they don't get it. And eventually we're going to use 3D printers to create guillotines and start chopping people's heads off.
Well, that'll be interesting. Well, people, we're coming to the end here, but thank you for all the questions. Like we said at the start, please leave reviews. Go on to Apple Podcasts. Show your support. Hack the system from the inside out. Hugh's prolific on Twitter.
I would recommend you panic.
I think that's really it. I mean, I will sign this off with a bit of Bryan Adams, because I'm in the world of Canada. The markets are melting down, and Bryan is there who need him. Bryan is a legend. By the way, Hugh, if you didn't see, Hugh was on CNBC the other day, and I saw your guitar in the background, nicely placed up against the wall. I thought you were going to pull it out, but unfortunately you didn't. But anyway, okay, here we go with Mr. Bryan Adams. Man, we were killing time. We were young and restless. We needed to unwind. I guess nothing can last forever. Forever, no. And now the times are changing. Look at everything that's come and gone. Sometimes when I play that old six string, I think about you and wonder what went wrong.
Oh, sorry, I just woke up there. What? Thank you. Wonderful. Thank you. I'm taking it off. We're going to end the stream. Thank you very much.
Goodbye, people. See you later.